Hey everybody, welcome to Sky Talks Trading. My name is Sky, and today we're going to be talking all about a little thing called dividend investing. This video is for anyone and everyone who has heard about dividend investing and they're considering giving it a go. We're just going to talk a little bit briefly about what dividend investing is, and then we're going to talk about the pros and the cons, because, you know, maybe there's some people out there who are trying to like sell you dividend investing courses or something who are going to say there are no cons. But to every style of investing, every market, there's going to be cons. There's cons to chocolate? No, there's no cons to eating chocolate. Of course not. But despite the fact that there are cons, there's no doubt about it that dividend investing is an awesome way to generate passive income. I love passive income. Income where you can just be sleeping. You know, to me, passive income basically means income while I'm binging Netflix, you know? You set it and forget it. That's my kind of thing. That's my jam. You know, it's an excellent way to grow your portfolio over a long period of time. Maybe it may not be as flashy and as Lambo-induced as day trading or swing trading or cryptocurrency, but it's a nice, stable, cool, easy, breezy way to grow that portfolio. And as long as you focus on solid companies that increase their dividends regularly, a very small sum of money could turn into a large nest egg, which is the whole goal of dividend investing. All thanks to a little thing called compounded gains. In simple terms, when you buy shares in a dividend-paying company, you own a little tiny fraction of that company. So regularly, they pay you a tiny fraction of that company's earnings. Many large companies issue large lump payments every 3 months or every quarter. When a company is doing well, doing strong over a period of time, and their earnings increase, not only does the dividend stay nice and high, but sometimes it can increase, you know, and give you a higher paying dividend. So let's get into it. Let's start with the cons. Let's get the bad news out of the way first. Despite what you might hear, dividend payments are not guaranteed. Nothing in life is guaranteed, guys, apart from the fact that you're going to die one day. All right? Life is unpredictable. If a company suffers some sort of crisis or financial struggles, then your dividend payment will be affected, obviously. You know, it may be reduced or even suspended for an unforeseeable amount of time. An example of a company that had to do this, General Electric, Ford. But this is where diversification comes in, you know, so there is things that you can do to hedge against this. Diversification is always going to be essential with your portfolio, in my opinion. Con number 2, the T word, taxes. Taxable. Yes, dividends are, in fact, taxable, with the exception of Roth IRA. Taxes can eat away at your portfolio over time. It's just something you gotta live with, really. Taxes are unavoidable unless you want to go to prison. Con number 3, slow growth. Some may say boring. Some may call dividend investment as a whole rather boring. But I say slow and steady wins the race. Okay, enough being a negative Nancy. Let's talk about pros. Pro number 1, immediate return on your investment. This is quite attractive, really. As a dividend investor, you'll immediately start receiving dividend payments, usually on a monthly or quarterly basis. You know, and each month seeing that real money come in when you're not doing anything, when you're not poring over charts and technical analysis and fundamental analysis, can, you know, feel pretty amazing. Pro number 2 actually has something to do with taxes again. There are, in fact, some tax advantages to dividend investing. Dividend investment taxes are taxed at a more favorable capital gain tax if you receive qualified dividend payments. Capital gains tax is anywhere between 0 and 24%, which is a lot more favorable than regular income tax. Pro number 3, it does happen that companies increase their dividend payments if you choose the right dividend company, which we will be talking about. We will do many videos about it. Don't you fret. So, you know, as their income, their earnings increase, as they get stronger, so too will your dividend payments. An example of this is Procter & Gamble and Chevron. Pro number 4, less hassle, less time invested, pretty much no time invested. You do a lot of your work up front where you are researching the best dividend companies. And if you do your research properly, well, then you just sit back and let it happen. These companies are typically more well established, so they have less volatility, which means less stress for you. You're going to feel a lot more calm if you've invested in a company like McDonald's than if you're investing, long term in a penny stock biotech company, So there you go, guys. Those are some pros and cons. If I missed any, which I probably did because I'm not perfect. Okay, there, I said it. If I missed any, leave them down in the description. No, you can write things in my description. That's only something I can do. Write it in the comments. And let me know if you're a fan of dividend payments or if you hate them, if they're just too boring for you. That's all for today, guys. I hope you enjoyed this video, and I will talk to you super soon.